our interest payments are higher than our Defense Department budget. If we didn't do something about this, then there won't be any money for anything.
And the market response to the back and forth has been volatile, especially when it comes to the bond market.
You are going to see a crack in the bond market, okay? It is going to happen. And I tell this to my regulators, some of who are in this room, I'm telling you it's going to happen, and you're going to panic.
The bond market is on the edge of collapse, and JPMorgan just issued its final warning. What's going on? Why should you care? And how could this affect your money? Let's break it down. Jamie Dimon's warning. Jamie Dimon, the CEO of JPMorgan Chase, the largest bank in the U.S., has sounded the alarm. Speaking at the Reagan National Defense Forum, Dimon said the U.S. bond market could crack under pressure. And that's a huge deal. Why? Because bonds, especially U.S. government bonds, are supposed to be the safest investments in the world. They're the backbone of global finance. When they shake, everything shakes. Dimon pointed to ballooning national debt, runaway fiscal policies, and weak demand for long-term bonds as the major red flags. He said, quote, "There could be a problem, a real problem, in the bond markets. What's happening in the bond market? So what's really happening? Yields are spiking. Investors are demanding higher interest rates to hold U.S. debt. That's because they're worried Washington won't be able to pay it back easily, especially with $36 trillion in debt and more on the way. Demand is falling. At recent bond auctions in the U.S. and Japan, investors showed weak interest. Central banks are selling off bonds instead of buying, and big buyers like pension funds are backing off. Credit downgrades. Even credit agencies like Moody's are waving red flags. They downgraded the U.S. credit outlook late last year, citing fiscal deterioration. That's Wall Street speak for, we're spending way too much money, way too fast. Why this matters to you? Okay, so how does this affect you? When bond markets shake, interest rates rise. That means mortgages get more expensive. Car loans, student loans, all go up. Stock markets could fall as investors flee to safer assets. And worst of all, if confidence in the U.S. government weakens, the dollar itself could lose its dominance. Dimon even warned that if nothing changes, we risk losing our status as the world's reserve currency. That would skyrocket inflation and weaken the U.S. economy. What can you do? So, what can you do about all this? Diversify. Don't rely on just bonds or stocks. Consider holding a mix of assets. Watch interest rates. Rising rates can hurt bond prices but benefit savings accounts and CDs. Stay informed. Follow credible financial news and warnings like this one. Prepare for volatility. We're heading into uncertain territory, and being proactive now can protect your finances later. If this kind of financial alert matters to you, hit like, subscribe, and drop a comment below. Are we heading for a financial storm? Or is this just more noise from Wall Street? Let's talk.